Hello there, my friends. Chris Marcus here with you on Monday, July 24th. Amazingly, almost, I guess, past halfway through the summer. Kids are going to be going back to school. They send them into prison early here in Colorado, early August. And in either case, today's video, we have an update on Ted Butler and the price of silver and some of the things going on underneath the surface. If you're not familiar with Ted's work, well, I'd give my recommendation. There's one thing I will give you an official recommendation on is Ted's column, which you can find at butlerresearch.com. And in terms of anyone who's interested in understanding what's really going on in the silver market, which in my own opinion has huge implications for what is going on in the rest of the markets and what will be happening, Ted's really a great resource because I know he's been studying silver for about 30 years. I forget how long he's been writing his column, but twice a week digs through all that exchange data that most of the rest of us can't even dissect. It's not the easiest report to go through, which is one of the reasons why Ted's a great resource in my opinion. Another thing I also like about Ted, well, there's many things I like about Ted, although he's a really methodical guy. He's not one of the silver's going to 8,000 tomorrow every day. And in particular, what he does is looks at the data and starts with the data and facts and what we can see and prove, which maybe proving something isn't the right word in the silver market because there's so much distortion, yet that's why it's helpful where Ted dissects what some of the bigger banks, again, you've heard a lot about the manipulation in the silver market, and it's fascinating to see the dynamics that take place under the surface. So if you're new to this, in short, interesting. In short, there's been a large short position that has existed where there's some entities that have basically sold silver, although they've sold paper silver, and certainly there's a large school of thought, and which I subscribe to, that they don't have that silver to deliver. So if you do reach that point where people demand physical or if certain parties change certain behaviors and stop selling paper that they don't have, that you could see a price explosion, which is my belief as well. Ted's been talking about that for a while. And what's interesting is that basically if you look at who's buying and selling silver, for the last couple years, even decades, there's been this large short position, and we've seen that as silver goes up in price, usually, well, not usually, continuously, we've seen more paper sales smash the price down, and Ted finds that, coincidentally, it's the same banking entities buying the silver at the bottom. I try not to get too into the details, because I think Ted's much better at explaining that, and I'd recommend for if you're really trying to understand the specifics, Ted's a good resource. Also, I want to keep these things simple, so this isn't just for advanced traders, but just regular people who want to understand what's going on. But the basic premise, as I've come to understand it, is that as the price goes up, we see these big dumps of paper metal contracts, which, keep in mind, a lot of these banks are supposed to be acting as market makers for their customers, so they have access to where the stop orders are. To give an example, if you're not familiar with that, imagine that silver is trading at $20.10. So there are a lot of people that might own silver and say, all right, I want to be long silver, but I'm going to put a stop order in, which if it goes below $20, then I'm going to sell my silver. So what often seems to happen is you have the price of silver around $20.10, and you get this big massive sell order that pushes it down a little, then the stops get triggered. Of course, there's a lot of the computer algorithms that get triggered as well. Price spikes lower, and you see a lot of these same banks buying it back. which again, from my experience, all I can say is that when I was on the New York Stock Exchange trading options, if I did something like that, I imagine I would be in jail the next day. So certainly, in my opinion, some manipulative, clearly illegal trading behavior. It's unfortunate that it continues to go on, although in the sense that it's created what I continue to believe is going to, in history, or rather in time, be looked back on as one of the greatest trading opportunities ever. You know, usually things don't get this far out of line unless they're manipulated. So there's the pros and cons. You know, is this the way I would ideally have it work? No, but that's part of trading. There's what we'd like, what we think should happen, what we think is fair, and then what's going to happen. And having an idea of how those all mix together can be pretty useful. And the big, I don't know if I'd call it big news, but what I've been keeping an eye on, which Ted has been reporting, is that for a long time, a lot of these banks, and specifically there's one bank that has seems to be the ringleader of this. The name begins with a J, and I'll let you figure that out. That's my opinion, of course, for all legal compliance. But that's what I've come to believe as well. And what's interesting is that for a long time, there was this large short position that was owned by the banks, which now has been passed off to some of these technical trading funds. So essentially, the group that I and others believe has been manipulating the market was short silver, meaning they would win if silver went down. What's interesting that's happened over the past couple of years is now this bank has become massively long silver, which means that they would benefit substantially if the price goes up. And as Ted has been reporting, the positioning of these contracts, if you look at whether the bank's short or how long they are, has never been this extreme in favor of now the banks having a reason for silver to go up. So that leads, and as Ted often puts it, basically the only thing required for silver to rise would be for the banks not to sell more paper the next time the price starts rallying. So if they just step aside and do nothing, and some of these hedge funds try and buy back their short position that they've inherited from the banks, that would be enough to see an exponential silver rise. Now, before you go out and do anything too wild, this is an indicator. It's not, we don't know exactly what's going to happen. Again, it's kind of like a poker game where you have imperfect information and you look at the clues and think about what might happen. Now, certainly we have enough. Again, assume I'm crazy for a second, I'm making all this up, and just look back at the history, whether it's the mortgages, LIBOR, or basically any other market where the banks have been caught and admitted that they've been manipulating the markets. So we see this go on all the time. And again, it's just interesting that if you look at these signs where, you know, if bank was short and kept driving the price down and now they're long to a degree to which we haven't seen before, certainly give some credence to the premise. Could it be that now they're going to profit from letting silver go up exponentially? So interesting times in the silver market. You know, we also had Andrew Maguire talking about nearing a break point where enough people come in demanding the physical metal that just isn't there, and that could also spark the metal substantially higher. Again, when do these things happen? Could have happened by the time you're watching this video, or it may be a few years off. So that's why, in my opinion, I think it's great that if you're just regularly stacking, purchasing silver, and not putting yourself in a position where you're forced to make trades for liquidity purposes, but just, to me, it's a great way of, much better than saving money in a bank and getting really a negative interest rate after you factor in the inflation. Although, again, with silver, I think it's important that you're prepared that the road between here and there could be a little rocky. we could see these positions of the banks change and go the other way. It has happened before. Certainly, it's felt as if we've been close to the big moment for a while, and obviously it hasn't happened yet. But that doesn't mean that it's not going to happen. The same way, if you were saying the mortgages were a bubble in 2005, you weren't incorrect. You were just early. So with that said, again, go over, check out Butler Research. I think it's $35 a month. He sends out 2 columns a week, which I just think that anyone who's reading that and understanding what's really happening, there's gonna be a day that you look back and we're awful grateful for what Ted's done and some of the information he presents. So with that said, leave your comments below and let me know what you think. Maybe you see something differently, but again, discussing it, always great. And we will see you again tomorrow. Thanks.